Want to head down to the SIBO and talk about trading it now. Scott Bauer is the CEO of Prosper Trading Academy. Scott, I'm looking at a stock, a longtime favorite. It's come under a little bit of pressure. Which way do you want to be when these numbers come out?
Yeah, I'm a little bit skeptical here. I mean, the street is set up where if this is not a blowout number, and that, I shouldn't even say a blowout number, Oliver, but something great in terms of guidance. This is, the street is really set up for more disappointment, in my opinion. You look at the charts technically here, and you've got the 50 and the 200-day moving averages just above the marketplace here, which could come into play and provide some really significant resistance here. So I'm actually using options for a downside play, a very conservative downside trade here. And what I'm looking to do is the market maker expected move is about $8. Okay, with the stock trading where it is right now, to the downside, if we get that move, that puts that around 140. 140 is also some fairly significant support. So I just talked about resistance just above where it's trading. I talked about now this support around 140. So what I'm going to do when I say this is a very conservative downside play, I'm going to buy a put butterfly. Okay, so I'm buying the 145, 140, 135. That means I'm buying one of the 145 put, and I'm using next week's options, not this week. So I'm buying the 145 put, selling two of the 140s, and buying a 135. So in an ideal world, in a perfect situation, stock goes to 140. I can do this, Oliver, for about 65 or 70 cents. So very, very conservative, very low risk, and it offers me tremendous reward to risk.
All right, so Scott, just to be clear then, when you're looking at the butterfly for the puts on CRM, the value add there beyond just picking one of those strikes, like the higher one, and saying, all right, I don't think it's going to break down through 140 meaningfully, is that just kind of adding on those puts for reach in case it does, you get big payoff?
So when you break down a butterfly, what we're really doing here in this instance is we're buying the 145, 140 put spread. So that's a very bearish position. We're looking at it to go down. But we're hedging that. We're taking some of that premium risk off by selling the 140, 135 put spread. So we're reducing our overall debit, our overall exposure by selling that downside put spread. And that's why we ideally want the stock to move to that short strike, which is 140, which is right in play with what the market maker expected move is, which also coincides with some pretty good support in the stock.
All right, I like it. Good setup, Scott, coming into the report, CRM. Definitely a little bit of a choppier chart than we're used to coming into Mark Benioff's big statement. So we'll be looking at it from the downside. Scott Bauer, appreciate the trade as always. Scott, CEO of Prosper Trading Academy.